Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
If you've traded long enough, you already know what makes Fridays dangerous. It's not the move, it's the chop. And right now, the market is wearing its take back your gains disguise. Say that 3 times fast. We've got choppy conditions, multi-ranges, stacking on top of each other, and the kind of messy structure that punishes impatience. The good news is that choppy markets don't have to be random if you treat them like a rotation game and you only do business at the edges. Good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, take a moment to subscribe if you're new and explore the resources linked in the description below. How's everybody doing this Friday morning? What's up, James? What's up, William? And I already replied to William this morning, and yeah, I'll try to squeeze in Intel. I know that they brought out earnings and it's sharply lower, so we'll try taking a look at that chart, see if there's a play, kind of like a day trade setup for this morning. Anyways, as we look into nice pump at 6 a.m., I guess was news. Yeah, I don't know what that was. I actually was in front of, so truth be told, I do get up at around 5 o'clock in the morning, and from like 5 to 6, I kind of hit the gym, get on the bicycle, just kind of that morning wake up. Before I come here into the office. And yeah, right as I was getting ready to, walk out of the gym, that thing popped. So yeah, I don't know what it was. I haven't figured that out. I came up here to the office and, try to analyze this market, and I didn't dig into that pop, but I was there for that moment in time. So yeah, that was a crazy pop. Take it all back, and then it took it all back. So choppy market. That's kind of how I wrote the morning newsletter. Was this is going to be choppy today? It's range trading, and then you just have to be patient. So we'll get more into that in the analysis. But as we look at the Y charts dashboard, as we usually do in the morning, right? Again, futures are modestly red, and it's after the risk on Thursday. So we're gonna, obviously, I mean, if you're here every day, or as we walk through everyday day trading, right? There was the if then, and if, as I talked about yet Wednesday, if that market from that Wednesday kind of push, we should have taken right off, right? If that was an inflection low on Wednesday, and a true inflection low when you look at like a longer term chart, then that should have, yesterday should have played out with more, momentum, and you really should have had a rip your face off kind of trading day. And then, right, that was what we were looking for off the open to gauge that, that really strong momentum. And then as the day, right, we did just like James had talked about, that 69.25 area was 69.24. That was the level as a good trade, right? But then as that kind of day progressed, as you got in to the day, like that should have been slammed down by hold the pullback, which it did, and then that should have took off. And then as the day wore on, right, you got choppy. And that's hopefully what I articulated yesterday, is that then, changes the tone, and then you're trading day trade type 6, where you're right, it's like this established value, established balance holds price. And then, in the overnight, we're getting that trading range / chop, and it's Friday, it's the end of the week. Think of option traders, think of 0 DTE, think of weekly options, and there's going to be this pinning, and you're not going to get, I would not expect today to be, a one directional trade, really a little bit of two directions. So we'll get further into that. Other than that, 9:45, there's flash PMIs, manufacturing and services. I don't think that's going to be, I'm not looking at that, right? Well, let's just go into that. I'm not looking at this being a big market mover, but these are things to kind of keep your eye on. That 9:45 comes around again. I'm not trading as that's going to be some kind of market moving event, but it's one thing to just understand when news comes out, what has the potential. And so you're not like, 9:45 comes around and something happens and you're not surprised, right? So these, as for me, I'm always like, all right, what's on today's docket? Is it important? Should I put a lot of, weight in it? Does that change my trading? Should I be patient? Should I wait? Or, no big deal, but also recognizing when it comes out so that I'm not surprised. So that's the point of today, is PMIs come out at 9:45, be on the lookout, but, I'm not taking that as any kind of market moving event, but I am watching it as far as, I'm going to, that comes out, 9:45 to 9:50, if, just to confirm, what I'm thinking. So if there's no knee-jerk reaction, then, my analysis is correct. If there is, then, I'm not stunned or surprised by it, because I knew that 9:45 the news comes out. So on that. So it's not something to not to be surprised. Fed Watch tool, similar things that we've been talking about. Listen, don't get too carried away in just the colors, right? Because this is 31.1, this is 31.2. This will kind of flip-flop back and forth. Same thing here. These are really close to numbers, so you're going to get sometimes way out in the distant future, you're going to get some flip-flopping. All this right in here, this is all very close stacked, where it could easily come in, right? And instead of getting a rate cut, the second rate cut, you're going to get this first one in, say, June as of right now. But, as we come into here, this, don't be surprised as time goes on, right? This kind of flip-flops until there really gets where market participants kind of really get a better gauge into the future. I mean, this is 2027, so, that's still way far out. It's a lot of speculation as of right now, and, right? So I just that caught my attention. I popped this up this morning, and I was, you just get fixated on the colors, and you just look at the colors, and then you don't really get into the numbers. And I'm like, oh, well, this makes sense. Like, it's just so close in the speculation in rate cuts way out in 2027 that the color is going to flip flop. So on the probability scale, but the really thing that we're looking for is next week, right? Expect no change in rates. That's almost, there's nothing guaranteed in trading, but that's almost like a shoo-in. And then again, this between April and June, watch as this kind of, this flip-flops, or does this come in and, then all of a sudden it's July that we're going to get the next rate cut. Those are the things that we're really going to be eyeing on in the near future. But as of right now, like, nothing's changed. So there's nothing to and again, adjusting portfolio or your mindset, there's nothing to really do as of now. So other than that, let's get out of the news. Let's get into the morning market analysis itself. It is 8:39. I wrote this at 7:15, and at that time, futures were down 10.5 points. It's down 13 points, so not much has really moved since I wrote this. So overnight skew was moderately bullish, right? We're at a 2.33% net long volume delta, so the overnight skew, is moderate. It's definitely something to pay attention to, especially if we start really kind of busting down, right? We're going to talk about these levels. Again, that 69.24 is still key in today's trading. So, right, this, does have the potential to be some supply overhead if, right, we really break that 69.24 where some of this positive skew gets a little bit unwound, right? The overnight market participants kind of overly bullish. They're positioned on the long side, and we start breaking down. That could be that has the potential. I want to make sure I use my words correctly. That has the potential to kind of push a little bit lower. As of right now, right, if we hold this 69.24 area, then right, then these people are skewed correctly, right, and then we're again continuing in the push higher. We are opening in balance, and this 10-day range is around 70 points, right? It's 68.25. Things that I want to talk about is this bullish energy is trying to stay intact. Again, I'm a little bit more cautious in today's trading, and how do I want to say this? I don't want to give the impression of analysis paralysis, but I did not like the fact of yesterday's price action. So the fact that what should have happened is if Wednesday was that kind of low, right? That Wednesday kind of Tuesday, Wednesday, inflection low, and then Trump came out, and this was really good, bullish, strong momentum. Then what should have came in today is we should have followed through and came in, right, similar to like days like any other inflection low. And yesterday's price action told the tale that wasn't it. So hopefully you didn't get beat up yesterday. Hopefully you read the price action correctly and realized, like, okay, the tempo, right? Again, overall pattern and tempo, right, told you that we're not going to have that kind of day. Market internals should have also been the green, that light, that cautionary light. That was really the cautionary light for me, because price was semi showing it. There was a little bit of the tempo wasn't there, but really what showed me the hand was market internals yesterday. Maybe we'll have a chance to look at that, and I'll show you exactly what I was looking at yesterday and why, as the IB got printed, we get into C period, we get into D period, why I felt like, all right, it's that push and pull market. We're not going to get any kind of really momentum trade, and so pull back my expectations and just trade the choppy range market. And it was the market internals that really told me that yesterday, as you got into the 10:30, 11 o'clock hour. So so I'm a little bit cautious, and I'm a little bit coming into this market where I need the market to prove to me that we are bullish. Otherwise, right, I'm gonna have to flip bearish and look at bearish price action, and then we'll look at how that looks like on a weekly chart, and the daily chart. So, but right now, as of you're playing live in the action, right, it's like you're on 3rd and 2, trying to get a first down, and right, you haven't turned it over yet, but it's you're still at, you need that 2 yards. And so, that's what we're trying for. It's bullish energy is trying to stay intact, but again, we're still inside the range environment. That means today's easy money isn't going to come from chasing highs. It's going to come from letting the market rotate. And again, I have 3 ranges in play, so we don't need to predict. We just need to recognize which range is controlling the auction and then trade the reaction, and again, not the emotion. So that's why today I'm looking at day trade setup 12. That's the kind of day I'm going to let the market profile do the heavy lifting for me. I'm also choosing to pair that with day trade setup type 10 for navigating the chop and timing the rotation. So if buyers want to stay in control, I want to see the market respect that 69.24 and a quarter, right? That's going to be important for me in that level. This market can stay still bullish when you look at the chart, as long as we stay above 68.97 and a quarter. And right now, we're trading at 69.30. It's no big deal, right? The ATR is sitting at 60 points, 68 points. It would be no big deal for this to come in. Let's just say we open at right now at 69.30, right? And we kind of come down basically 30 points, and 68.97 gets hit. And again, it's just this kind of push, pull back. It's a deeper retracement than what I really like, but that it's still, bulls are in, still have the advantage, and then it takes off. But again, in this, it's just choppy, and I'll show you why that is, and how I'm looking at that in the volume profile. But again, just so I'm clear, I'm always want to be very clear. I don't like the wishy-washiness. I'm still looking at this market. I mean, I want them to hold this and what I want and what happens, but when I'm reading the market price action, the must hold level is 68.97 and a quarter. Sorry that I'm beating this so hard, but you know, especially on Fridays, I always feel like Fridays are the last day of the week, and then you don't have another time to trade until Monday. And if you wreck or you have a bad Friday in trading, that just wears on you for the whole weekend. And that's psychologically, you know, it's one thing to like trade on Thursday or a Wednesday. You have a down day, and it's like no big deal. I'm gonna come back at tomorrow, and we're gonna, tomorrow's a new day. But when you fuck up a Friday, that psychologically will play mental games in your head all day Saturday and all day Sunday, and it'll ruin your time with family, your time with friends. It just kind of sits there in the back of your head. So, yeah. So anyways, 68.97 again becomes still buyable. On the other hand, if we lose that 68.97 and a quarter, sellers can break it, and then if they hold it and reject in any attempt to reclaim it, that's when the tone changes on the pressure, and then that's when I'm going to stop thinking about buy the dip and start thinking about protect the week, the week in trading. So again, I'm going to show you why this is also important. This Fight Club, right? So Fight Club is at 69.44.75. That is going to be the heartbeat of today in the chop, right? So don't let this static point of control, which is very prominent in a lot of charts, a lot of time frames. So I'm going to show you a lot of time frames, and this level is going to be something that you're not going to, right? Don't fiddle in that 69.44.75. That level is going to be chop. It's going to be mess. You're going to get, really beat up. So this is the level that you're going to want to stay away from, but it is the level that you're going to want to watch because, if we come into there and they fight it out, which way does it break? That's going to be important. And then again, like we're sitting below it at 69.31.75. If we don't come back to it because we've traded in the overnight where we've come up to it and, rejected twice. So we've already kind of rejected that area twice. So, this should be important in reading market price action and understanding what's happening. So the goal today is to stay out of the middle, right? I'm only getting interested if we stretch away from value and I want to show rejection. And then as we close today, the key level as a closing basis is, do we close above 69.70.50 or do we close below that 68.97 and 3/4? So, right, this is a Friday where professionalism pays, right? So be patient today. And again, if you're not reading this price action, right, you're better off taking the day off and keeping your week green and not getting, don't blow up, don't turn a good week into a bad week, or don't turn a Friday, into a red day and then go into the weekend and that play on your head. So that's really kind of today's, beat that horse to death kind of mode, where I'm just don't want you to come in and wreck a Friday and then wreck your weekend. So I'm just going to leave it at that. On the charts, let's look at the charts. Weekly charts, it's a Friday, right? So again, I kind of look at weekly charts. Here's the S&P 500, and this is where we're sitting on a candle, right? So last week we did end up forming that doji, and what's realistic expectations, especially with yesterday's chop, is do we just end up chopping around today? And this is a day chart, and let me take out a different color candle. Right? And do we just settle in, and again, it just chops around and we get a day like this where we pierce down into the low, so we take out yesterday's low, we don't take out yesterday's high, and then on the day, you kind of get these 2 days back to back of consolidation. You do got next week where you got Fed policy on Wednesday. So again, is that market? And again, think of options market, think of how there's, has a high chance of being some pinning, right? Where market participants are expecting some kind of volatility, retail traders, right? They take these positions out of the money, calls, puts, whatever, thinking the market's going to move. And then they get priced out worthless because the market kind of pins at the end of the week and you don't get no movement and you just, market makers keep all your premium. So it does have that kind of feeling and chop, that range trading going on, especially from yesterday. Yesterday really told it. Coming in today confirms a little bit. And so again, that's the thing that I want to beat today's death is be patient, trade the edges. This market's not probably going to go anywhere, and we're going to, it's going to be like choppy range trading. It's a Friday. Anybody who's an institutional investor, they're probably going to make their trades early. It's a Friday. They're going to leave by noon. Volumes are going to dip down. It's going to be shitty. So have realistic expectations coming into today. With that said, let's go look at the volume profile chart. Hi, Lisa. How's it going? And then let's see. They need to pick up. Can't believe silver is at $100. Yeah, I know. Gold is definitely knocking on the door of 5,000. It's crazy. Crazy markets. Crazy times. Let's look at the volume profile. And again, this is where I was talking about the stacked ranges, right? You have this stack and right, we have these stack ranges down here. And then one also thing just to let you guys know is on this chart, this static or the developing point of control did shift, right? So it was down lower, way lower. And then it shifted all the way up to 69.44.75. So this is what I want to show you is on this long-term chart going all the way back to, I hate messing this chart up with you guys. So, right? Like, look at all the price action in the volume that this thing is built around, right? And so the point of control was way down here. And then with this most recent price action of yesterday and in the overnight, this thing shifted higher, right? So here you have a level on the chart, on this chart, which dates, where does this go to? What do I have this to? Almost the end of August. So this chart goes all the way to the end of August. And here you have, the developing point of control is 69.44.75. Keep that number in your head. Like I said, 69.24 is the level that you want to keep in your head. And then 68.97 is also where, from this move, the buyers, they move it up, they consolidate, they come down, trap sellers, and then, right, it's another move higher. Now, that doesn't necessarily have to play out in one day. This is an hourly chart. This is not a 5-minute chart, right? So, realistic expectations, so again, bullish still until we get below that level. How did I talk about yesterday where I said, if we don't get that big move, then on a spectrum of is trading easy or hard, and I said, right, if we get this move out and there's momentum and we get a push out, it's going to make, right, today, next week, trading easier because, like, it's just a go. And we want to be bullish and accumulate as much as we can. And I said, if we don't get that and we stick in the established balance and we stick into this we've talked about for many days, if this, this profile needs to build out, then we're just going to be in chop. And this is going to make for, on a spectrum of trading, it's going to make trading harder, not, it'll bring it over to the harder trading spectrum than shifting to the easier. So again, we're in that. So again, just mindset, understanding psychologically what the market's doing. We are in a harder trading environment, not so easy peasy, a caveman can do it situation. Because I want to show you so many charts on that 69.44.75 level. Let's go to this chart. And again, this is, so you have that long-term chart going all the way back to August where it says, hey, the developing point of control is 69.44.75. And then what do you have? This is the weekly profile chart of the week. And where do you have this week's developing point of control? 69.44.75. Right? So again, long-term chart going all the way back to August. The volume profile says 69.44.75 is the mode of price. And then you have on a weekly profile that same number. And then if we go to yesterday's profile, this chart, I believe, yes. So this is yesterday's profile here. And then when we come in today, what is today's static point of control? 69.44.75. So again, you have multiple charts giving you multiple same level, right? Same confluence. And so that's why I say, like, this should be fairly easy and to understand, like, where Fight Club's going to be. And that's the area that you do not want to initiate a trade. You do not want to initiate a trade in here. This would be more of like a magnet. Right? Let's see if I can do that magnet again. All right, I'm going to bring let's bring this over. Let's have some fun today. It's Friday. So this would be the magnet. And we're not going to draw the macaroni and cheese like we did the other day. Oh man, that really sucked. Guess can't be that big. All right. Put in the comments, what do you guys think of my art drawing? On a scale of 1 to 10. Tell me what you think. Anyways, this will be a magnet for price. Oops, got to bring that back down. There we go. So this level is going to be the magnet for price. So again, as we open up, that's the thing, right? As we talk about is I'm watching that same 69.24 and a quarter level. And then, right, as price gets sucked back in. Now, I am very, let's get, oh, dang it. Anyways, lost it here. Let's put that back up. So anyways, come on, guys. You guys got to play around in the chat. Scale of 1 to 10. What do you guys think of my magnet picture? Anyways, let's get on to the trigger chart. And then I want to look at, William asked about Intel. What time is it? 9 o'clock? We got some time. All right, take a drink of water. Trigger chart. As I talked about that, you can't even see it on the chart. That's not good because I want to show that level down here, right? That actually you still can't see it, can you? 69. Oh yeah, 97. Okay, so that 69.97 level is down here, right? So when we're looking at this, this has to hold, right? To try, where they come down once and then twice. This needs to hold, right? And you get a magnet back up into this, and this becomes Fight Club, right? So watch this edge, or I'm going to watch this edge as we open up. And then again, the real, you know, if we open up and they do like a liquidation break, right? They get everybody bearish. It liquidates down in here. This becomes like a 30 points, right? Candlestick in a period. And then, right, so now everybody's bearish. That's what they want you to believe. And then as price comes in, you're going to get people like trying to sell a retracement, right? And then they take it back up. And then again, this is that magnet. I can't stress enough. You know, when you look at that chart 2, and you look at the weekly profile, and you look at the daily profile, and all those things, like this is going to be a magnet for price. So whether it's this level and then it comes in and then this is it, and we, you know, anytime we can get off the edges, right, it's sell back down, or it's come down and buy back up, and right, you fiddle in the middle. This is not a good place to initiate a trade in here, right? Because this will just be chopped up, right? You get like, you know, this kind of price action where it's choppy, and then it kind of comes down, but then it doesn't go nowhere, and then it's just chopped. That's not a good place to initiate the trade, right? It's these edges, you know, up in here, down in here. I would love it if we got a juicy one down in, you know, this area of 87 to 905, right? And especially if they do it off the open. A period opens up and they liquidate. You get a liquidation, like a long liquidation, and retail traders, they don't understand what's happening. They think, oh, this is, you know, bearish, and, you know, so then as it, you know, so nobody does anything. They didn't short off the open. It liquidates, and then they try to, you know, sell, and then this thing just drags back up. And again, that 69.44.75. So again, like that's the, you know, that's what you need to watch out for. That's how I'm trading it. And again, that day trade type 12 with day trade type 10. And again, if it is really bearish, right? Like let's just say it is bearish and my bullishness coming into today is wrong. The bias is wrong, right? Then again, you'll need to take out, price will, you know, it long liquidates, and it does, and somebody does get the retracement. Then you would need this to bust down through that, for me, that 68.97 level, and then come back in and hold the pullback, and then right, that would then tell me that selling pressure is more extreme than what I had anticipated. Price tells me that, and then that's what's happening is price is telling me they're exploring prices lower, and right, you're in exploration mode, which would almost set up like a day trade type 4. But that has to be proven to me. That's not proven to me yet. So again, the higher probability trade in my assessment is it's still bullish. Nothing on the chart is broken that Wednesday price action, but it's not, you know, it's not aggressive. It's more, I don't want to say the word responsive, because again, I'm trying to choose my words carefully. I can't think of a word to describe it, but this price action is more of there's no conviction, right? Market participants don't have high conviction, so they're not like putting their money down and like laying into it, right? It's more of, you know, yeah, a little bit. Nothing says to get out of my positions at this time, but nothing says to add to my positions at that time. And then you're just getting the options market, or you're getting the passive income or the passive market participants, your 401ks, and that's just the only thing like bidding in the market, right? And so flows, you just have this more or less choppy flows is what's moving the market, and not initiative market participants, whether it's the sellers or the buyers, right? Like just market participants aren't high conviction, and so you don't have that aggressive initiation of the trade. So then what's happening is the real engineering, or the behind the scenes, the real market mechanics is how do I say, like controlling the market price action. And so then you're looking at 401k passive flows, and you're looking at options market, so 0 DTEs, weekly options, and then you're getting the market makers shuffling, positioning their risk. And again, market makers make money, retail traders once in a while get lucky. That's how if you're going to trade this and, make this a living wage and trade this market, you have to be realistic in how this game is played. For every retail trader is like, oh, I knocked one out of the park and, I made some money. Most of the time they're losing money, and most of the time they're making shitty bets because they really don't understand good hedging and risk management of their book. And, you're playing against these guys who are, mathematician wizards, and right, and they're extrapolating your money out of the market for themselves. Otherwise, Citadel wouldn't be in the market. They'd go out of bankrupt, right? Because you got retail traders that they're so smart, and they know what they're doing. So a lot of times that's what's happening is retail traders are coming in, they're taking YOLO bets. And don't get me wrong, sometimes those bets pay off, and sometimes, but on a day in, day out basis, you know what I mean? These market makers are the real players. And so that's how you have to think. You have to think like a market maker. So again, it's, not what you want to trade, or maybe not what you want to see, but how are they seeing it? How are they positioned? And, you want to position like them. That's how I'm an advocate of, understanding who really moves the market. Institutional investors move the market, and every so often when they're not convinced into the positions, or they're already overweight into a stock or into an index or into a sector, right? Then what you kind of get is just then these flows that control the market. And if you understand how the flows work, then again, that'll make you a better trader. Anyways, a little bit of a rant. I can't believe you guys didn't vote on my magnet picture. Man, what is going on with you guys? Anyways, hopefully that helps out in today's trading. Understand where 69.44.75 is, and right, trade accordingly. This market is still cautiously bullish, and right, going in today, trade the edges. Let those extreme edges play out. Day trade type 12. With that said, let's close it out on the dashboard. Oh, I know what. Yeah, William wanted me to look at, what time is it? All right, it's 9:10. Really quick. William wanted me to look at Intel. And let's take this. So we already know where the day chart is. Weekly chart, right? Bullish momentum. We tapped 56 or 54.60, right? We're trading at 47.83 in the right now. Let's take this down to the hourly chart. All right. I mean, as much as you would look at this and this looks super bearish, I mean, really, you just took back that big move, and it's a comeback. I mean, if I'm looking at this chart, still, this really shows me of like a buying opportunity. Where again, The market moved, people chased, and then they're getting nailed. And so this is the price action in which what you want to see is, right, you get a move up, it rotates all the way back down, right? And this move was so extreme and emotional, right, that on the pullback, and it comes all the way back, this is where then you want to see market participants, right, say, yup, even though this was an emotional move and it was kind of cray-cray, right, as we pull back, you know, price action, market participants will confirm that, yup, this is the level, and then they're going to take back off, right? So again, you have an uptrend, right? Let's draw this out like you would with crayons, right? And then this holds, and then you go. Now, where it gets questionable is you get a reaction, they come up, right, into the 50s, and then they roll over. And then you got, which everybody should, know, then you have, what pattern is this? Right? Head and shoulders. So we all know that pattern. Nobody's stupid. So again, on that kind of pattern, you know what I mean? But this is not the pattern which this breaks down and we keep on going lower. I mean, don't get me wrong, I'd watch for that. And that would be, but on a risk to reward, because this is the game that we're playing, right? Risk to reward. You're in an uptrend, right? Higher highs, higher lows, higher high, higher low, higher high, higher low, right? Here's that higher low, right? Higher high, you have not violated yet this low, right? So until then, right, the trend is your friend, and we keep on plugging away. This is that a lot of times in markets, when you see an emotional kind of move up, people they chase. And this is where chasing comes into. This is why you do not chase, because you chase, market participants chase, and then late longs get liquidated. This is called a liquidation break. And I know it's called earnings, but right, late longs get crushed, and then right, they get long liquidated. So I know how do I say this? The energy and or the emotion and that knee-jerk reaction you see, that's what happens when people chase and they're late to the party. So, now as a market participant, if you did not chase and you saw this move up, right? This is where, all right, now I got historical references on like a day trade type 10, right? And so now I'm using advanced support and resistance. And this is, right, here's your risk. And then here's your reward, right? Your reward would be first would be targeting the high, but really you're looking for an extension, right? You're looking for an extension. So here you had where they tested the high, right? But then they paused and then they took off for the extension. And so, if you were to trade this, right, you had to move up, you have a retracement, right? You buy the retracement, comes up, target one, you target the, last inflection high, and then you're looking for then the extension move higher. So again, risk and then reward, first target, and then, you'd go past it and expect Intel to then carry on. And this is more of when I look at it, the way I read it, is more of a buying opportunity than it is to like, holy shit, crap your pants. And, we need to, start selling shares of Intel. So that's how I'm reading, and again, I'm not going to drill down on anything lower than an hourly chart because I don't, this is not I don't want to be too speculative, because I don't trade Intel on a 5-minute chart. I don't follow that like that. So this would be more like a swing trade, style position for me. Whenever there's only a couple markets that I trade 5 minutes and fast time frames, and I take day trades. And those markets are the ES, oil, gold, and the dollar. Other than that, most charts, I don't really get down into 5-minute charts. Hourly charts are the fastest time frame, and I'm going off of weeklies, dailies, and hourlies on most trades. The only thing that we're day trading, or I day trade on like a high regular, is again that ES. I trade the ES every single day. That is, except for, Mondays are my worst day. Most of you guys know that. So Mondays are hit or miss, depends on my feeling or what I've got going on for the day. But then, Tuesday through Friday, this is my life. This is my profession and my job. So I'm trying to extrapolate money out of the markets on a daily basis. But that's Intel. Anybody else got anything? Lisa put on there a 10. Definitely look like a magnet. Thank you, guys. We got to have some fun, right? It's Friday. You got to have some fun. Hopefully you guys are making money in the market. So, yeah. I like the participation. Hopefully, William, that helps you out. And, right, on Intel, I am not looking at this price action, even though, you're waking up to the headlines and people are like, oh, Intel's down, XYZ percent. And, right, earnings were crap. This chart does not, this price action doesn't say that. This just says buying opportunity. Thank God earnings came out, and right, longs got liquidated in the short term, and right, Intel on a longer term chart still really shows good price action. Let's take that back to the weekly. Let's open this one up. Go back 5 years. I mean, this chart, we're back down into, what I say, 47s. Right? This price action from here pulls back, pushes out, pulls back in this push. I mean, this just screams, pull back and then go. And, on a weekly chart. So again, like, as you get 4 of these candles, that's a month, right? A month of trading. This chart really looks, fairly good. You got some momentum increasing. This still looks like this could build out on the centered oscillator, right? And kind of get up into these higher histograms. So again, like, there looks like there's still 1, 2, 3 or 4 more weeks of trading for this to kind of build out and, right, get in higher and get up into the 70s area, right? So chart looks good. Long term, short term, I would not and that's probably, the lesson is, don't take a trade, just watch it, William, if you're not confident, and watch how that plays out. You'll see these liquidation breaks where the chart is bullish. There's nothing that's breaking the chart, but it's got ahead of itself in price, and people chase, and then that chasing creates a liquidation break, right? Because you get late longs or late shorts. And then that is as long as you didn't chase, right? You wait for the juicy pullbacks, and that's the thing that you buy. And then, right, you just get that frustration. Anybody late longs, then they get out, they have to exit the move. And then when really that was the great buying opportunity, and then they get chasing again. It's you don't never get ahead of the move. You're chasing the price constantly. And so again, being patient, understand risk to reward, understand the dynamics of pullbacks. You break out of a high, don't, get in a habit of not chasing this move. Let it go, and then let it pull back, and then that's the move. It's the scary move that you want to buy back into. And then as it gets higher, that's when you want to sell. Sell into the chasers. And, that's the habit that you want to, form to. So anyways, hopefully that's helpful. If anybody's based out of Myrtle Beach or you're in the area, come check us out. Boom. We are here. Here's the address. I'm going to always conclude with this. 100 Sutter Drive, Suite 101. Phone number, email, website. I'll also conclude, if you're looking at real estate in Myrtle Beach, right? We have great short-term investing condos in the area, right? These are beachfront condos, really good for vacationers. Me and the wife, we own some. I really believe it's good to put in your portfolio. The thing that I want to kind of solicit, I guess, is if you're serious about buying some real estate, you live anywhere outside of Myrtle Beach, you've come here vacation, it's something that's been on your mind, come talk to Tina or myself, but Tina's the broker. And if you come in and you're serious, we have condos for you to stay out for free. Stay at one of our condos. We wine and dine you, take you out to dinner, show you a good time, and kind of spoil you, and we can have deep discussion. So if you're serious about that, and that's something that you want to, have a conversation with, look at these things, and purchase, we have free accommodations, and come call us, talk to us, and we'll hook you up, set you up, and treat you right. No other realtor or brokerage does that. I think that's something that we do here at Pries Capital Real Estate. My wife does. So I want to highlight that. I think that's a perk that's relatively not seen in the markets. I don't see any other real estate brokerage doing that. And my wife, that's a perk of being her client. She pampers you and spoils you. So with that said, as always, learn, trade, profit, and I will see you guys Tuesday. Have a good weekend. Take it easy.